Hi everybody, welcome to our discussion on this topic, which is leases. Friends, in this topic we would like to talk about lessor accounting. Okay, when I say I'm a lessor, I'm the owner of the asset and I'm allowing somebody else to use my asset, and in return of that I'm getting some money, right? That is something which is my lease rentals or lease payments, right? So how should I be accounting for such a lease? Is it an operating lease or is it a finance lease? Okay, of course the accounting shifts to different ways. The accounting is being done. We are not discussing that at this point in time, but we really want to understand as to what is an operating lease or what is a finance lease. Okay, the easy pick is that an operating lease is a lease which is not a finance lease. Okay, but a finance lease is not something which is not an operating lease. The operating lease is not defined by the standard, but a finance lease is defined by the standard. I mean, even an operating lease is defined by the standard, but it simply goes as a negative finance. So it's something that is a finance lease is more specialized, right? Let's try and understand that parameter here. Okay, so what is a finance lease to me? A finance lease is essentially talking about that, look, there is a parameter, there is an indication that the user of the asset is as good as the owner of the asset. Okay, not in legal form, because he is not the owner, it's me, the lessor, who's the owner, but in substance he is the owner. In reality, he uses the asset as if it is his asset, not somebody else's. Okay, so what I'm trying to say is that a finance lease would somewhere indicate that the user is as good as the owner. Okay, so what makes him the owner, right? Effectively, he is running the show, and that is where the lease is defined. The finance lease is defined if the lease transfer substantially all the risk and rewards incidental to ownership, right? That is where the user has the discretion to use the asset as his own asset. Okay, and the standard gives us some kind of guidelines, some kind of indications in terms of when would you want to say that the user is, for example, the owner, right? It says that there could be a transfer of ownership. So if I say, for example, I'm using a building. Okay, so there is a building, assume a life of maybe 100 years. Okay, I've taken it on lease for 10 years, right? But after this 10 years time, the lease gets ended and the building becomes mine. Okay, so the agreement suggests that after 10 years of time, the ownership transfers to the user there. So for the first 10 years, he is using the building. For the remaining life, he is using the building again, right? It's as good as an owner. He is working in the capacity of an owner, and that is where it's an indication of a finance lease, and that is where you start observing that he is good. He's an owner, actually speaking, in accounting perspective. Now, how do we do accounting? We're still holding that back, but effectively, if the lease transfers the ownership to the lessee, to the user, it's an indication of a finance lease. Okay, what if it does not transfer, but it gives you an option? Here it is mandatory, the ownership is mandatorily transferred, compulsory transferred, but what if an option is given? Okay, it needs to be observed, is the lessee going to exercise the option, right? Is it reasonably certain at the start of the lease, at the inception of the lease, that this guy is likely to take that option? Okay, think of it like this. Let's say the building lease is for 10 years and there's a purchase option that the building can be purchased for $1 million after 10 years of time. The lessee is given an option that he can buy this building for $1 million, whereas the expected market value is going to be $10 million at that point in time. Won't he exercise the option? The answer is reasonably certain. No reason to believe that he will not. Okay, not apparently today. Very likely that the purchase option will be exercised, which means for 10 years the building remains with him, and after 10 years also the building is still used by the lessee. And that is where you start observing that if there is a purchase option available to the lessee and it is reasonably certain at the inception of the lease that the option is going to be exercised, it's again an indication of a finance lease. Okay, right? It says further, if the lease is for a major part of the economic life of the asset. So for example, in the same case, I'm saying that the building has a life of 100 years and the lease term comes for, let's say, 95 years. Well, as good as the complete life is there available for the lessee's use, its substantial period is covered. The standard does not really say what is substantial period, and that is where a bit of a subjectivity is likely to come, right? So you need to be a bit more open to talk about that, a bit more open to understand what could be a substantial period of life. Is it 90 years, 90%? Is it 80%? Is it 70%? There is no answer given by the standard. But yes, somewhere you start looking at broadly all such indicators to try and observe what could be a substantial period of time, right? So we say that if it's a major part of the economic life, substantial part of the economic life of the asset, it is going to be an indication of a finance lease again. Okay, right? What next? It says another possible indicator is the present value of lease payments is substantially the fair value, right? Again, whether 95%, 90%, 80%, not defined. But you are saying that, well, look, I'm going to charge you for the use of the asset. I'm the owner of the asset. I'm going to charge you for the use of the asset. I will charge you an amount over the lease term, over the period. The true value thereof, the present value thereof is as good as the value of the asset today. Okay. So in a way, I'm going to take everything about the asset. So it is as good as you are buying the asset from me today, right? You're just not paying for that right away. You're going to pay in, installments, pay it over the period, right? So when we say that the present value of the lease payments, present value of the installments, rentals is as good as the fair value, it's a clear answer that it's an indication of a finance lease, right? Think of an example. You're thinking of buying a car, but you don't have money. Okay, so what do? You take a loan against the car, or the bank finances the car for you. Okay, effectively the bank says, look, you won't pay me over the next 3 years, next 5 years, whatever I charge you as installment, the present value of that is as good as the car, right? Till the time you're completing these installments, the car is in my name. So legal owner is the bank, but truly I'm using the car there. It's again an example of the present value of the lease payments are substantially the fair value, and that is how you start bringing the context of the user is as good as the owner. You have paid for the car, paid for the asset, but you're just delaying the payment, and since there is a delay, the other person is charging you extra, and since he's charging you extra, it is just about the time periodicity, just because you're delaying it. Okay, so the present value of that money, whatever is collecting from you, is as good as the value of the asset stands today. Okay, likewise, we say if the asset is of such a nature that only the lessee can use it, right? It's meant for him. That is why this asset was created. Okay, so a lessor creates an asset, customizes an asset, builds an asset, molds an asset, whatever name you want to give it. It is so specialized that it's only the lessee who can use it. Nobody else can use that, which means that the lessee is the owner, is as good as the owner, and that is where the accounting starts falling in under a finance lease. We shall be discussing that later, but apparently a lessor shall classify each lease as either an operating lease or a finance lease. It is essential to understand what is a finance lease, because if you understand what is a finance lease, if a lease is not a finance lease, it becomes an operating lease. Okay, So what is a finance lease? We say if the lease transfers substantially all of the risk and rewards incidental to ownership of an underlying asset, that is what is meant as a finance lease. Given some indicators, any or all of them together, any or a combination of any of these together may indicate that a lease is actually speaking of finance lease, where the user is as good as the owner. Looks okay so far? A brief lecture, but something which is of a value from an accounting perspective. We shall be also discussing at a later point in time how to do accounting under an operating lease and how to do accounting under, of course, in a finance lease in the books of the lessor. Good so far? So thank you very much. Good day and take care. Bye.